Merchant banks in India. Who are merchant banks or bankers? Merchant banks can be defined as financial institutions which provide a wide range of financial services such as consultation, management, counseling to large corporate houses, or even individuals. They do not accept deposits or provide loans to the general public. Goldman Sachs, Morgan Stanley, Credit Suisse, etc., are some of the well known internationally acclaimed merchant banks. While in India, commercial banks such as State Bank of India, ICICI Bank, and Citibank provide merchant banking services, among others. Merchant banking as a concept can be traced back to the 17th and 18th centuries to countries like France and Italy, where grain merchants intermediated or assisted other merchants in financial matters for a small fee. In India, merchant bank services started as agency houses of the Tatas and Birlas in the early 20th century. However, modern day merchant banking could be traced to the establishment of National Grindlays Bank in 1967. Following their footsteps, Citibank also set up a merchant banking department in 1970, followed by State Bank of India and ICICI in 1972. In 1986, IFCI set up their own merchant banking division. Later, private individuals and consultancy firms, both national and international, also entered this race. IDBI Bank, Syndicate Bank, Canara Bank, Bank of Baroda, Bank of India had also set up their own merchant banking divisions. After 1991, the growth was further accelerated, resulting in a count of around 185 in 2019. So, why do we need merchant bankers? This question would also largely cover the role and importance of merchant bankers. Merchant banks in India and around the world perform the following functions as part of their standard operations: issue management, credit syndication, portfolio counseling, project financing, brokering in stock exchange, advice on M&As, mergers and acquisitions, services to private high net worth individuals, NRIs, or even public sector units, management of interests and dividends, leasing services. Let's go one by one. Issue management. Merchant bankers advise their clients on the issuing of different types of shares, such as equity shares, preference shares, and debentures, which are a type of debt instrument. Credit or loan syndication. The merchant banks provide loans to a specific set of clients for setting up or executing various projects. Portfolio counseling. Merchant banks also help their clients in investing and managing portfolios, which are large investments consisting of a number of various financial instruments and investments. Project counseling. Clients are advised on various procedural and financial aspects of their short or long term project requirements, also called project financing. Brokering in stock exchange. Many merchant banks act as brokers of stock exchanges. They buy and sell shares of different types on behalf of their clients. Advice on expansion and management, more connected to mergers and acquisitions. Some merchant banks also provide advice to their customers on the expansion and modernization of their businesses. They advise on mergers, acquisitions, and takeovers too. Services to private parties and public sector units. Merchant bankers also offer many services to public and private sector units, like helping in raising funds, marketing of securities, foreign collaborations, and managing long term finances. Merchant bankers are also called market makers because They play a very important role in marketing the securities available in the market, management of interests and dividends. Merchant banks also help their clients in the management of interest on and dividends on their invested shares and regarding the rate of dividend as well as their timing. Leasing services. Some merchant banks also help in providing leasing services to their clients where the lessor allows the use of specific assets to the lessee for a certain period on behalf of rentals or fees. Let's now look at the categories of merchant bankers. There are four types. Category 1 merchant bankers need to have a minimum net worth of 5 crores. This category contains the merchant bankers who can act as issue managers, consultants, advisors, portfolio managers, and undertakers. For their services, they could charge a minimum of 2.5 lakhs for the first 2 years. Category 2 merchant bankers need to have a minimum net worth of 50 lakhs. These merchant bankers can act as advisors, consultants, portfolio managers, and underwriters. However, they cannot act as issue managers on their own, but can do so as co-managers. For their services, they could charge a minimum of 1.5 lakhs for the first 2 years. Category 3 merchant bankers need to have a minimum net worth of 20 lakhs. This category of merchant bankers are allowed to act as advisors, consultants, and underwriters only. They can neither act as issue managers on their own nor as co-managers. Also, they cannot undertake portfolio management activities. For their services, they could charge a minimum of rupees 50,000. Category 4 merchant bankers do not have a stipulation about their net worth. This category of merchant bankers can only act as advisors or consultants regarding an issue of capital. For their services, they could charge a minimum of rupees 50,000, similar to category 3 merchant bankers. That's all about merchant bankers for now. If you have questions, shoot them through the comment section below. Happy to help you learn. Subscribe now to College Guru 2020. Thank you. See you soon. Bye bye.